Good evening to you, Jashwin, and thank you so much for joining us once again. We really appreciate your time.
Good evening, Aubrey, and good evening to everyone tuning in today. Good to be back.
What is it with SARS and high net worth individuals? Why is SARS going after them, and how are they going after them?
Look, so important to remember that SARS has a dedicated high wealth individual unit, right? But the threshold for entry into this high wealth individual unit club is not 50 million. It's higher. It's far higher. Now, what SARS's disclosure speaks to, and this was forewarned in the 2022 budget speech already. It's a disclosure for individuals with a cumulative asset value, including both local and foreign assets, in excess of 50 million rand. Now, the rationale for, firstly, that exact number is not clear. However, what is clear is SARS is using this as a means to, one, identify non-compliance, and two, delve deeper into what they believe to be or could be unexplained wealth.
So, two birds with one stone, as it were. They want to find out whether people are legitimately earning their high net or high wealths. Is that how you say it? High wealth, yeah. And secondly, they are basically doing an inventory as to who has that kind of wealth and how they are getting it, is what you're saying to me.
That is exactly correct. So as an example, if you are declaring a wealth of, let's say, 30 million in terms of liquid and transferable cash on hand, SARS want to know where it came from, and it really does speak to the originating source. So if you say that came from the disposal of 3 properties 5 years ago, if SARS were to then ask you, listen, was the correct capital gains tax declared at the time, and do you have proof of that? You must be able to evidence that to clearly show the source of wealth.
Why? Why is SARS doing this two-pronged investigations? What is the national imperative for that? And I guess there would be one, right?
So the entire imperative to that really does speak to not just SARS's strategic objectives, but also certain recommendations that were previously made by the Financial Action Task Force and the Davis Commission. Now, when we look at grey listing, right, it was publicly announced February this year in the budget speech. However, the mutual evaluation report that underpinned that grey listing was initially conducted in 2019 with firm findings as early as the end of 2020, which means this, as much as to the general taxpayer, to the public, to the market, to professionals, it almost appears to have come out of left field. To government and to your legislature and your decision makers, they were aware of the outcomes of that mutual evaluation report.
Why is all of this important, Jashwin? I mean, why is it important to the rest of us who are far from having a net worth of 50 million rands and above?
So if we look at it from a perspective of importance to the rest of us, so to us average Joes, or you and I, we will never qualify. But
well, I hope it's not a never situation. Come on now. I mean, we obviously don't qualify right now, but I'm hoping that it's not a fait accompli, that it never happens, yeah?
Yeah, look, I think you're probably a lot closer than I am.
That's the funniest thing I've heard all day. But yeah, go for it, man. Yeah.
Yeah, man. So what this means is it bears testimony to SARS clamping down and investigating. Now, when we say investigating, if we speak to something like a lifestyle audit, right? Lifestyle audit doesn't mean 50 million, doesn't mean 20 million. It just means there's a bit of doubt as to whether you are living within your means. So something of that nature, it has been going on in the background since about as early as 2007. And it's come more to light in recent times. I think a good example that the listeners will be aware of was Hamilton and Global, right?
Yeah.
What happened there? He posted on social media, saw it, and the dots didn't join. So a lifestyle audit was conducted. And similarly, it's something like this which allows the investigation into what's deemed unexplained wealth. And it really sends a strong message that if SARS can now look into these wealthy individuals, not necessarily high wealth, not for that unit, but into these wealthy individuals and deep dive into what is usually far more complex tax affairs than for the average Joe on the street, there is nothing to stop them from looking into any taxpayer, regardless of where they sit on the income spectrum, should there be any suspicion or evidence of current or historic non-compliance. And that is why it's important for listeners and the average taxpayer to actually take note of this.
And I suppose that, as you say, this is not just for high net worth individuals, that for any reason that SARS may deem a need for investigation or some sort of audit into your financial affairs because you've posted something on Instagram or Twitter or whatever the case may be. This has to do, of course, with making sure that the taxman gets what is due to them. For making sure that the fiscus has the money that it requires for service delivery and other things that government must use money for, right?
Yeah, look, I mean, service delivery, non-service delivery, potato. I think we've kind of acclimatized to the fact that no matter how much that service delivery agenda or narrative is used, we still receive poor service delivery in this country on the majority of items, especially actual electricity. But yes, it's ultimately to fill the fiscus, to cater for things like service delivery. And who knows, maybe if this 50 million disclosure goes well and, great extent of non-compliance are picked up, there'll be enough in the fiscus to sort out the load shedding.
Why high net worth individuals? Why is it that they get to? Okay, this question is going to sound weird, but why is it that they get to have a unit that is dedicated to investigating them? Are they not part of the general population of South Africa that should be subjected to the same sort of scrutiny that everybody has? I'm asking this question that I imagine a high net worth individual would ask, to say, why do I get singled out? I happen to be a lot more endowed financially than other people, yes, but why should there be a whole unit dedicated to checking people like me out?
So in terms of the rationality, how that specific unit works. Now, as we did say, that unit has a higher threshold than 50 million in asset value. But that aside, the operational of that unit is a case of, as a high wealth individual, you are assigned a dedicated relationship manager from that unit. And the rationale behind that is, one, high wealth individuals generally have more complex tax affairs that does not fall in line with what your average SARS official who is capturing or processing a return or taking a call in a call center is well versed enough to assist with. And two, where there is non-compliance amongst high wealth individuals, it is generally of a greater quantum, so a much higher amount if there's non-compliance. The average taxpayer, they might get a letter of demand from SARS for 5,000 Rand, whereas that high wealth guy, his letter of demand, chances are it's about 5 million. And that's because to get to that level of wealth, it's typically seen that there are corporate involvements in terms of different shareholding. There are some sort of international transactions or international investments, offshore policies, global endowments, and that creates a degree of complexity where there is requirement for a specific and highly trained unit to be assigned to these individual taxpayers.
How are they doing it? What are the mechanics of this process of probing, of finding out whether or not high net worth individuals have been kosher in the way that they've accumulated that wealth, and whether or not they've been paying their dues to the taxman?
The first step in the right direction would have been the implementation of the high wealth unit. And those falling below the threshold will now be caught in this net of the 50 million disclosure, which is effective already for this filing season, as in right now. They've got to declare assets and liabilities. And when that is considered, first consideration will most likely be based on income in terms of bank statements, salaried income, interest income, dividends, potentially inheritance. It really does depend. Do the funds received justify acquisition of the assets being declared? If yes, okay. If no, verification. Please submit source documents evidencing the originating source of the funds, either on hand or used to acquire the assets at acquisition date, whether it was this year, whether it was last year, whether it was the year before. And from there, they will start connecting the dots.
Give us a call if you are a high net worth individual. And I imagine if you know that you have 50 million plus worth of assets, or perhaps even liquidity in cash, give us a call. I'd love to speak to somebody that has that kind of wealth. And then whether or not you've disclosed and whether or not you're aware of the fact that SARS is onto you. What is your attitude to this new regime? Maybe not so new, but at least in this tax year, in this tax season, you are required to make those disclosures. How does it make you feel? Are you feeling as though there's a witch hunt? And if you do, why haven't you disclosed in the past? Is there, Jashwin, perhaps room for high net worth individuals to feel as though they are being unfairly hunted down?
Of course there is. I mean, if you look at it chronologically, you'll recall that there was prior discussion around a wealth tax. That was early last year, if I'm not mistaken. And that never came to fruition. But even that was targeted at the wealthy. Now, if you go even further back, and very, very simple, you look at our tax system and our tax bracket, and you immediately realize the more you earn, the more successful you are, the more tax you pay. So that's kind of targeting and almost being penalized for your wealth or for being financially smart has at the very least had consistency in how it's been applied under our tax system. I mean, if I'm saying I start working and I'm in the lowest tax bracket, I work 14 hours a day, 16 hours a day, just to climb the corporate ladder, get a better paycheck. and suddenly I go from 18%, and 5 years down the line, I'm getting taxed at 45%. So I've now worked effectively 3 years out of the 5 years, if I add my time because of those long days. And my reward is a little bit more cash in bank and a much larger tax bill.
Yeah.
That is the reality of it. And it's actually deterring. And what you see practically is a lot of wealthy individuals are offshoring their assets. They're offshoring their funds. And SARS are taking steps to try and regulate or prevent or, make that a little bit more difficult and more stringent from a verification and tax treatment perspective. Things like the approval international transfer, there's talks of a beneficial ownership register. It's already active on the CIPC system. There's amendments to the ITR 14 for companies to declare beneficial ownership on shareholding or interest in the companies that must translate and correlate to those individuals who it was declared under. So SARS is really casting their net wide, and that compliance crackdown is evident, whether it's individuals, whether it's companies, whether it's local or foreign assets. But the crackdown is happening.
You said earlier on that the net, as it were, is being cast over those types of individuals' total wealth. And that is not just what there is here in South Africa, but everywhere else where this person may have representation in terms of their wealth. And it goes back to that whole conversation you and I had in the past around being a tax citizen of South Africa and what that means. Given the fact that many high net worth individuals might take umbrage, might not be very happy about this development, are we likely to see more people perhaps deciding not to be tax citizens of the Republic of South Africa, given the tax demands that we are seeing as a result of this new regime?
So yes, you will see most likely an increase in financial immigration. So citizenship can remain South African. However, tax residency status.
Tax residency status. That's the word I was looking for. Yeah.
That will be seized through the formal financial immigration process. And our financial immigration team, they've always been busy. I think they receive something ridiculous like 300 or 400 leads every week. And that is people looking to exit and do so on a permanent basis, and therefore financially immigrate. But one thing to remember with the financial immigration is there is a deemed disposal of assets. Now, what that means is if you decide to financially immigrate tomorrow, either you sell all of your properties, etc., and you then pay the capital gains tax on that. Alternatively, there's a deemed disposal calculation, meaning it is calculated as though you disposed of your assets on your date of departure, and you are still liable for the tax on that.
Sure. It can't be good for the economy, can it? I mean, if we've got a lot of high net worth individuals deciding to relinquish their tax residency in South Africa because of these reasons, surely that can't be good for the economy, can it?
Look, so in the short term, there is a reaping of reward. You're getting funds into the fiscus. But in the long term, I fully agree with you. I mean, one nice payment now upon an exit, but that exit results in loss of the tax from even one individual or two individuals. Over a period of 5-10 years, it suddenly balances out to what you gained from that deemed or actual disposal upon their departure. And now you are running at a loss thereafter because that individual no longer contributes to the South African tax base.
at Ferioni1 says, please ask your guest what are the tax implications of proceeds made from criminal activities, and how did they arrive at a 50 million rand threshold for the wealthy?
So, as I said earlier, and I actually did have a chat with some of my my contacts with SARS earlier today, and they are currently clarifying how they arrived at the 50 million, and hopefully that will be released in a media statement in the next 2 or 3 weeks. If not, and if we happen to get some sort of feedback before then maybe the next time I'm on with you, Aubrey, I'll be able to answer the rationale behind that.
Is it important for them to give us the rationale for that? You know, most of the time, the relationship we have with the South African Revenue Services is one of compliance or non-compliance, right? But we don't really go deep enough to ask what is the rationale for some of the decisions that they make and what legislation they rely on. Should we be asking those kinds of questions of the South African Revenue Services?
Look, I think it's always good to have an understanding of why you are doing what you are doing, or why a regulatory body is doing what they are doing. And it helps with building trust in the tax administration system. If, SARS is asking for accountability and transparency from taxpayers, it does help in building that trust if they can show the same on their side.
Yeah. You see, I'm a little concerned as I get to be educated about our relationship as citizens with the South African Revenue Services. I'm a little concerned about the fact that we tend to be passive experiences of our relationship with SARS. Even when we're unhappy with whatever decisions that they make about what we owe or whatever they owe us. But I'm asking the same question, I suppose, in a slightly different way, to say, is it incumbent? Should it be something that we as citizens understand as to the legislation, the rationale for the way that SARS operates and the way that it goes after the money that is due to it according to the law? Should we be a lot more probing, or is it just another situation where we simply comply whenever they say this is what you have? Can we fight SARS legislatively? Legally, is it possible to fight SARS? I'm asking this because I imagine my question is representative of the ignorance of most citizens. If SARS says something, it's almost as if that's it. But can citizens say, no, I disagree with you? This is not how it works.
Yes. So there's actually two avenues for that. One example is what is currently underway, which is the draft amendments to tax legislation. They were published on Monday, this past Monday, for public comment, right? And that's one way to actually push back on certain proposed changes. And then the other, where things are already written into law, is to either follow a dispute process with SARS or apply for a ruling, or, if you can't afford it, you can apply for a payment plan if you're in agreement. You apply for a payment plan, you apply for a compromise of tax debt. If you're in disagreement, then you enter into the dispute process. If you feel that SARS hasn't provided you sufficient reasons, you can always submit a request for reasons to SARS. So there are many avenues where, if a taxpayer says, I do not agree with SARS saying I owe them X, there are avenues to bring relief and to bring clarity.
I say this because somebody said to me once that with SARS, you can't complain and not affect whatever it is they say you must do. You must comply, then complain, right? And in this conversation, we're having a conversation about high net worth individuals who may or may not feel that they owe SARS anything, whether they disclose or not disclose. Do they, in your experience, take SARS on legally sometimes as a result of a decision, finding made by SARS on their tax matters?
So it's not just them. I mean, you're familiar with Andre. I think the listeners are familiar with Andre, and Andre actually heads up our dispute segment. So
at Tax Consulting SA.
At Tax Consulting,
all right.
Yeah. So Andre heads up our dispute segment, and the fact that tax disputes warrant an entire department with a team of attorneys means it's not just the high net worth guys or the high wealth guys that are taking SARS on. It's everyone, anyone and everyone who is in any sort of disagreement or discontent with a finding by SARS does have applicable resolutive channels to follow. And the only preclusion there is where you wait too long to do it and prescription kicks in, then you have a bit of a problem to dispute. But you can, at that stage, still utilize things like the voluntary disclosure program or the deferral of payment mechanism or the compromise of tax debt mechanism to get some sort of resolution and a bit of relief depending on your circumstances.
And what are the levels of success when somebody takes on SARS legally?
So your levels of success are dependent on your merits, right? Your merits for dispute. And one thing that is of key importance there is being able to submit the supporting documents to support either your claim or to discharge the burden of proof on SARS's claim. If you've got your documentary records in order and your merits are strong and you are within the dispute timeframes, then you can engage with SARS and your chances of success are good, or as the legislation specifies, prospects of success.
You spoke earlier on of the fact that this is a wide catch-all net to eradicate non-compliance at all levels, but especially with the wealthiest levels. What are the levels of compliance, in your experience, by high net worth individuals?
Look, so with high net worth individuals, it really is a case of you've put your hand into a bag of jelly beans and you don't know what color you're going to pull out. And the reason I say that is high net worth individuals generally have a specialist accountant, they have a specified tax practitioner, and that is because they have complex affairs, multiple sources of income, investments all over the show, and they need financial expertise to assist in managing, mitigating risk, and ensuring compliance. So on one side, you get the wealthy guy that is so squeaky clean because he's got a team of professionals backing him. Then on the other side, you've got the wealthy guy that has not done his due diligence. He has either not got a team of professionals or he does not have the right professionals. And that is where we find varying degrees of non-compliance. And when I say varying, it's anything from an outstanding tax return or a late tax return to undisclosed income to assets that have never been disclosed to the revenue authority that are held in some trust offshore. And you ask the guy, listen, why was it not declared? Oh no, it's held offshore. It's never touched the shores of South Africa. It was bought in Guernsey. It's got nothing to do with South Africa. They don't need to know. So you've got those two trains of thought, and it really just depends on the team of professionals that the high net worth or any taxpayer really, including corporate taxpayers, the team of professionals that they surround themselves with is what ultimately dictates the degree of compliance, which should be absolute. Alternatively, the extent of non-compliance.
The guy who says, look, this fund or these funds are generated in another country. They have stayed in that country. Yes, I am tax resident in South Africa, but this money was generated in country X other than South Africa. They don't need to know. Are they breaking the law?
Absolutely. So any South African tax resident is subject to tax on their worldwide income. And all of these new disclosures that have come into play this year speak to disclosure of local and foreign assets and liabilities at market value and at cost, which means whether it's touched the shores of South Africa, whether it is a case of some listed share that you've moved offshore from South Africa, that you've offshore to a different platform, or whether it is something that has never seen South Africa, never been near South Africa, not even the seed capital for the investment is from South Africa. It does not matter. If you're a South African tax resident, there must be full transparency on all of your financial affairs.
Yeah. And and are these high net worth individuals telling about money that is overseas? Are they telling, or are they saying, listen, I'm gonna give myself the benefit of the doubt here? And what are the consequences of that if they are?
Look, so from our practical experience and our client base, every single one of our clients is compliant. We ensure of that. And should we ever be approached by someone who wishes to kind of skirt that line and not disclose, they will never be a client. We do firmly believe in that the full compliance, transparency, and accountability principles. And when it comes to, being approached, and the thing is, I've seen it. I have received calls, guys set up a meeting, they come through, they tell you about 18 different companies that they own. One's here, one's here, one's here. This is how the income flows. This is the dividends. There's a shareholder's loan here. They didn't ask for share transaction here. There's a bit of a buyback clause here on some of the shares. Some are in their personal capacity, some are in a trust, some are held by other companies within the same group, some are unstructured. And it's really messy. It's all over the place. Like when you throw a ball of yarn and you just keep picking it up and throwing it in a different direction. So you get that. And you have a sit down with someone who's approached you and you say, listen, this is what we need to do. And this will be the outcome. You will have to pay X to this revenue authority, Y to that revenue authority, and Z to that revenue authority. And the moment they say, listen, I'm not willing to do that, I'll pay X, but I'm not going to pay Y and Z. It's at that stage that any tax advisor or attorney that is worth their weight in gold, or should I say more practically, worth their hourly rate, it's at that stage that they should actually turn these guys away, because the ramifications span beyond just the taxpayer. If there is advisor involvement, that advisor could be in prison right next to their client.
Yo. What then of those funds that are in another country, in another jurisdiction, as it were, tax jurisdiction? Are we not going to see a double taxation of those funds if they were generated in another country? Will they not be taxed there? Is the South African tax resident not being unfairly treated in that they are being double taxed for those funds?
Sorry, Robbie, could you just repeat that? You broke up.
I'm saying that if, for example, I am a tax resident of South Africa, but I have, in whatever ways, generated funds in another country, will that money not be taxed in that country? And because I'm a tax resident of South Africa, will I therefore not be taxed double? Isn't it a bit unfair?
So Aubrey, do you remember there was a discussion you and I had a a couple of weeks back about the double taxation agreements.
Yeah.
Yeah, so that's where that kicks in, right? So if you are a resident in South Africa and you've worked in another country and you're liable to tax in that country, and you are liable to tax in South Africa, the tax you pay in South Africa will be the differential amount. So as an example, if you are taxed at 100,000 in Mauritius, and that's withheld at source because you work there and you earn the money there,
Yeah.
and you are liable for 200,000 in South Africa, you only pay the top-up balance, right? So you pay the other 100 in South Africa. If the situation is flipped and you pay 200 in Mauritius withheld at source, yet in South Africa you're only liable for 100,000, so that the SARS will then give you a refund of the 100,000 you were overtaxed, and that's where it's very important, because remember, even with foreign sourced income, for expatriates, there is that exemption for the first 1.25 million, which is tax free.
Okay, but then I guess the system is fair then, right?
Look, on the prospect of double taxation, then yes, it's fair because it's regulated by agreement. But, and this is very much my personal thought, but something as simple as the sliding scale of tax brackets, my personal thought is you shouldn't be penalized for working harder to earn more to give your family a better life.
Yeah. And is that the feeling sometimes from high net worth individuals, that there is a witch hunt, there is a penalization of their efforts to create wealth in South Africa?
Oh, it's not just sometimes. That is the feeling each and every time I consult with wealthy clients. Literally the feeling.
We spoke earlier of an individual who was high net worth, who was flashing their wealth on various social media platforms, and that has become part of the culture, the popular culture. Instagram, Twitter, Facebook, everybody showing off what they call "look at God" lifestyles. Look at God lifestyles. Is there a warning that needs to be issued to them?
Look, so the reality of it is, if you have rightfully obtained your wealth and used that wealth to acquire 10 Bugattis, great. You have nothing to worry about. But if you have some sort of under-the-table dealings going on, or you got a Bugatti as a gift, because if that's the case, I need new friends. But if you got a Bugatti as a gift, then certain things that you cannot explain, you cannot justify, you have not been transparent about, regardless of whether you flash on social media or not, at some stage there's going to be some new regulation or some slip up by yourself or some verification or audit by SARS or another revenue authority, and you're going to get caught out.
Is that the message that you are sending out to high net worth individuals in South Africa, to say, make peace with the fact that at some point or the other you will be investigated if you are a high net worth individual?
No, so that's not the message. The message is, if you are a non-compliant individual, whether you are high net worth, ultra high net worth, simply affluent, or a small business owner, you are going to be investigated at some stage. If you are a billionaire that ensures they have the correct team of finance and legal professionals around them to ensure ongoing, historic, and all future compliance, you've got nothing to worry about.
So the issue here is be compliant, be compliant, be compliant, be compliant. What is the steps that a high net worth individual must take in their march towards this compliance?
Look, so step one is finding the correct tax advisor, tax practitioner, attorney, etc. Right, that's step one. If you have found the correct professionals to assist you in your compliance journey, they will be able to, one, diagnose your affairs, the full extent of non-compliance, if any, and advise you on remedial measures to be taken to rectify. And two, if a robust enough service offering, they will then execute on those remedial measures. Now, most of your non-compliance comes from tax returns, right? Reason being is either one, there's one or two outstanding along the way, or two, they were inaccurate or under declarations made in historic tax returns that will require remediation. Where that is the case, and very easy case, last five years worth of tax returns, there was an under declaration for whatever reason, and SARS never picked up on it. But you want to become compliant now. So you enter into something called the voluntary disclosure program. On the other hand, if it's a case of, tax returns, this is the problem, actually I want to do a correction, then where older periods, you need to first file a dispute with SARS and request that they open that period for correction, because you'll know that with a specific period for a tax return after submission or after a time frame, if an estimated assessment is issued where no submission, that period is then closed, which means if you fail to submit a tax return and SARS issue an auto assessment or estimated assessment, and the period subsequently closes without you doing a correction. Remember, currently the correction is 40 days from issuance of the auto assessment.
Yeah.
If that period closes, you must then ask SARS, maybe they'll be nice and say, okay, we'll allow it. Alternatively, the formal avenue is to then file a dispute to open that period, and the reason for that is you need to do a correction on a return.
And a company that would, or a tax professional that would be assisting that high net worth, or just any taxpayer, would then be able to do the necessary on behalf of that client?
That is correct. But in many instances, what we see where a correction is needed is a specific power of attorney must be signed by the client, empowering the tax practitioner or attorney or accountant to actually act on their behalf.
Jashwin Baijoo, these are very, very important issues, I surmise, and it is definitely in the interest of all taxpayers, registered taxpayers, high net worth taxpayers, to be compliant. What do we do tomorrow morning in order to start our journey for compliance, if indeed we've never bothered with regards to this matter?
Look, what you can do tomorrow is pop me an email, and I'll put you in touch with the right members of my team, either on the dispute front, the tax returns front, it's the business, my accounting team, or alternatively, where it is simply a compliance issue to be resolved, you will deal with the compliance desk.
How do we get in touch with you, Jashwin? Give us your email address.
All right. So it is Jashwin, JASHWIN @taxconsulting.co.za.
Jashwin Baijoo, always great talking to you, and thank you very much for the education, brother. We really, really appreciate it.